When you look at the market volatility, the market sell-off, that seems to hit a lot of the trade stocks, but also a lot of the tech stocks. Are we going to see more of the rout?
The likelihood is clearly there, because the trade route is not going to go away very quickly. This is a very fundamental conflict that we've ended up in this year. The correction in tech stocks in general perhaps was a bit overdue after the solid returns and gains from last year. But it's not such that, in our view, the earnings potential, the growth potential, the outlook for tech is being completely taken away by this. But right. It is unsettling. So
are valuations too high for tech, or is it really that the market is worried about the supply chain linkage, which we don't fully understand?
I don't think the valuations for tech is too high given the growth potential they offer. I think tech has ended up in a political battle between the US and China for the, if you will, the future leadership of the technology sector globally, which both realize is absolutely crucial for future growth. And right now seems to be playing out particularly hard, especially in October, with yields at the long end in the US going up, uncertainties about earnings of some of the bellwether big companies. And here you have two corrections that have woken people up to reality that we're moving probably towards actually a more normal environment where interest rates are sitting at a bit of a higher level in the US, certainly. And as a consequence, you need to discount your stocks and your future earnings at a different rate.
Michael, what's your base assumption? That the trade war continues for 20 years, that it escalates, or that it actually is ratcheted down? If you, as Chief Investment Officer, is that the one thing you need to get right? Because from that, then it's your calls on currencies that kind of stem.
I don't think this is the one thing to get right. I think it is more important to get right how are you positioned overall for global growth with these disturbances coming in that we've seen this year. Trade tensions, we obviously now here in the UK have a very special political situation, but overall you need to ask your question, how long do I wish to be positioned for growth and towards equities to participate? Is 2 to 4 years.
Okay, so you think after 2 to 4 years there's a kind of downturn which comes from what?
I think
the tax cuts coming to end in the US, or a global downturn?
I think downturn is too strong of a word. I think a slowdown is probably overdue. We're in the second largest or longest expansion of an economic cycle, coming out of a very dark phase of the financial crisis. Central banks being incredibly accommodative to get us out of this situation. So it's not surprising that it's long, but it is very clearly the case that the business cycle has not been removed. It is just shifted perhaps in terms of time and span. And for us, it is time to take stock of your risk positioning, but overall we would advise still to try and participate in this growth cycle.